Incredible thing about this big bank move away from home equity lines of credit is that you don't have to have bad credit. In fact, it happened to Steve Scholes of Plymouth, and his credit score is an almost perfect 800.
The invoice here, invoice that one down to there.
At 46 years old, Steve Scholes of Plymouth is a very hard-working guy. Along with his wife, Linda, he started a company called Precision Orthodontic Labs, a company that produces high-quality orthodontic appliances. And to help cover his business expenses, 5 years ago, Steve went to Chase Bank to take out a very low-cost loan called a home equity line of credit, more commonly referred to as a HELOC. Is it almost like having a credit card that you pay on?
It is, except the rate of credit is much lower, and also you can use the interest as a tax deduction because it's considered mortgage interest.
For the last 5 years, Steve has faithfully made payments on his HELOC. In fact, he's never missed a payment of any kind. So imagine how stunned he was when he got a letter from Chase Bank last month telling him his home equity line of credit was being suspended.
He got off the phone and said, "No, I'm sorry. What has happened is they've suspended your line of credit because you exceeded the line." No, I didn't exceed the line. They made it so I exceeded the line. I didn't do anything.
So what happened? Very simply, the value of Steve's home dropped dramatically because of Michigan's crumbling real estate market. And the loan that he took out through Chase Bank was based on the value of his home. Steve isn't the only one. Since January, hundreds of thousands of American families have had their HELOCs taken away or drastically reduced by major lenders like Countrywide, Bank of America, Citibank, SunTrust, USAA, Wachovia, and Wells Fargo.
There's a lot of people out there that maybe are using this credit line to pay a bill until they get their job back, or cover a mortgage for a couple months or whatever. And I mean,
make their car pay.
Exactly, you're putting people in a really bad place.
All right, Murray Hill, do we have?
Alan Stalter is a mortgage expert with the Laker Group in Livonia. He doesn't like what's happening with these HELOCs, but he understands why so many banks are cutting HELOC owners off. Why are these banks suddenly freezing people out of these lines of credit?
The biggest trigger has been the decline in home values throughout the country.
So what can you do if your home equity line of credit is frozen? Al says one of three things. Number one, appeal the decision to cut you off to your lender in writing. Number two, apply for a new HELOC at another bank. Al says smaller banks and credit unions are your best bet. And number three, if possible, draw out all the remaining money in your current HELOC before the bank shuts you down.
Last thing you could do is, if you have an unused balance and it's not frozen, is draw it down if you think you'll need it. It's yours, you can do that.
As for Steve, he was able to reestablish his home equity line of credit, but it cost him, and he had to give the bank a deposit of more than $10,000. This is Bill Spencer, looking out for your financial survival.